We the people unite.
Hi, everybody. Welcome to We the People Unite. I'm Kim Page, and with me today is my good friend for, 30 years or more, Linda?
Yeah, probably.
Uh,
If not more.
we wanted to do a short video today around the Social Security discussions, what's new in this big, what I call BS bill, but we won't go into a lot of detail about that today. So the talk about Social Security, the tax on tips, and the taxes on overtime, because Linda and I both worked for a company called ADP, Automatic Data Processing, which, as you know, are outsourcers for all different size companies in the area of HR, payroll, time and attendance, everything all encompassing. So we have a little bit of insight into taxes and payroll. And we are not experts, though. So I want to make sure that we put that disclaimer out there. And we are just actually having a conversation about what we've uncovered. Linda, thank you for doing this. I really appreciate it.
Yeah, thanks for inviting me.
So let's start with this email that I received as someone who receives Social Security. And I was a little bit taken back by it. Number one, that we received an email like this from the Social Security Administration, because for me, it's flat out propaganda. But I want to highlight what we are going to talk about today, because the first thing is this no tax on Social Security. That's kind of the soundbite, right? We're helping seniors, no tax on Social Security. So here, down here in the second to last paragraph, it says, the new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries, providing relief to individuals and couples. Additionally, it provides an enhanced deduction. I want to focus in on that word, additionally. It provides an enhanced deduction for taxpayers age 65 and older, ensuring that retirees can keep more of what they've earned. And what I'm going to say and what we are going to uncover is this is misleading. This particular statement is misleading at best. And so that's the first thing that Linda and I want to talk about today. And we went straight to the White House website, to the government website that talks about the no tax on Social Security is a reality in this one big bill. So it goes on to say that under the bill, the vast majority of senior citizens, 88% of all seniors who receive Social Security will pay no tax on their Social Security benefits, according to a brand new analysis. And it gives a breakdown on what that means. So, Linda, is this misleading?
Very misleading. Very misleading.
Should we, maybe before we say why it's misleading, should we talk about how Social Security kind of works to remind people of how it works? Do you want to walk through that, or would you?
Sure. Actually, there are three sources that go into the trust fund. So if you think about what most of you, that are working and are receiving a paycheck, whether you're self-employed or whether you're working for an employer, you are paying a Social Security and a Medicare tax. And we are not going to talk about Medicare today. We're only going to talk about Social Security because that's a whole.
It's a lot, yeah.
It's very complicated.
Right.
So this all started back in. It came about in 1935 when Roosevelt delivered financial benefits to retired workers in response to the Great Depression. There were too many people that they lost everything, and they were living in the streets, and they were dying. It's been changed over the course of time. Dwight D. Eisenhower, who happened to be a Republican, expanded the program in 1956, and that expanded it to uncover self-employed Americans, farm workers, domestic workers. And he also, at that time, created an early eligibility. So right now, you know, when the law was originally written, it was at 65. But Dwight D. Eisenhower extended that to cover women starting at age 60 for a reduced benefit. There's a lot that went into all this. I'm not going to go into all the history. But then again, in 1983, I believe it was, Ronald Reagan, another Republican, went in and made changes. And he basically made changes to the early retirement ages so that they would receive full benefits at the age of 65. And he was raising the age for anybody, he was raising it from 65 to 66, and then anybody that was born in 1960 or later, they would have to wait till 67 to get full benefits. In 1983, when Ronald Reagan made these changes, that's when he started taxing Social Security for recipients, and that's the important. That's all that history was, just to get us to the point.
Get us to that point, okay.
Get us to the point of there's been changes to the program, and that Ronald Reagan said it's taxable, so you pay taxes out of your paycheck. That's one source. And as you see at the top, if you work for an employer, you pay 6.2%. The employer pays 6.2%. If you're self-employed, you pay the whole thing. Then that goes into a trust fund. Well, that trust fund, you've got money accumulating in there. That gets invested into U.S. Treasury bonds. So that interest that's received funds that trust fund as well. The third way it gets funded is by Social Security recipients who make enough that they need to pay taxes on their Social Security check that they receive. That's the third element that goes into this trust fund.
Okay.
The government does not, when they're allocating money, the House, the Senate, Congress does not invest anything or put any money towards this program. We, as the people, pay for that program.
We do. So it's a completely separate program from government budget.
Exactly. They administer it through the Social Security Administration. So that's kind of an overview of what Social Security is. I think as we talk through what are we calling it? What are we going to call this bill? The new law. I have my own names for it.
Yeah.
What we're going to pay into that, or what that's going to do, is going to have a huge impact on that trust fund. So everything that has been talked about no taxes on Social Security, and no taxes on tips and overtime, all the things that were hyped up as yay, none of them are bad. It's more that the impact on that trust fund and how it's going to impact that trust fund long term is what the real damage that could be done.
Okay.
Was that more than
so I had pulled this also from AP, which is part leading into what is misleading about these statements, right? That there's no tax now on Social Security, because that's blatantly false, and we'll talk about that, right? So AP did some reporting that Trump keeps saying that the GOP mega bill will eliminate taxes on Social Security. It does not. It does not. And we are going to talk about what it actually does. So let's go right into what it actually is. It's a temporary, right, tax deduction.
Correct.
So how does that work?
Well, they're actually calling it a senior bonus. So
Okay.
go back to your paycheck. Think about when you get a paycheck. So you have your federal taxes, your state taxes, your Social Security, your Medicare, right? All of those are your statutory deductions that are coming out of your paycheck. That's not going to change. You're still, and this applies to both your overtime and your tips as well. You're still going to pay the taxes on everything. The difference is that they're going to offer certain people, as with Social Security, a tax deduction. Now, Kim, you said it earlier, and the way they wrote it sounds like, oh, this is going to be big. It's not going to be that big. 64% of seniors who receive Social Security already pay no taxes because they're not making enough to pay taxes on. Okay.
Right.
What they're saying, and this only applies to if you're 65 and over. So if you're you're 62 and you're taking Social Security, doesn't affect you. But if you are 65 and older, and you have to fall into a range of adjusted gross income. So if you are making less than $75,000 a year as an individual, you're not paying federal taxes, or you're not paying taxes today on that. It really is going to be anybody that falls between 75,000 and 150,000 of adjusted gross income that would receive this benefit.
Isn't it like a $6,000 deduction or something?
$6,000 per person.
Per person.
And you can claim up to $12,000 per couple.
Okay.
But again,
put that.
You have to be 65 and older, and you can't make too little of money because you're not already paying taxes. And if you're making 150 or above, then you've you're on the high end, and it's not going to apply to you either. So it's only going to really affect about 33.9 million seniors. And that's, again, provided they have an average after-tax income. Well, what it'll mean is about an average after-tax income of about $670. And it's not forever. It's only from 2025 to 2029. So, 2028, actually. So at the end of 2028, what happens at the end of 2028? Somebody leaving office at that point?
Yeah. A coinky dink is what we call that. A coinky dink
is going to disappear unless Congress extends it. And I think Congress extending it'll really depend on a lot of factors going into that. But if you think about it, if it doesn't get extended, all these people who did get this benefit all of a sudden aren't going to get that benefit anymore. And they're used to living on a certain amount. That amount's going to be taken away.
Got it. So as I pull up this article, this is really a great little article that highlights the overall impact and what's misleading in this. So not only is it not a direct, I guess, no tax, like people are going to think based on reading that. This is what I would think based on reading the email, is that if taxes were being taken out on my Social Security check before, they're not going to be taken out now at all. And that's not the truth. It's the deduction.
You get to take a deduction off of your tax.
Take the deduction.
You're still going to pay your tax. You'll just get to claim it at the end of the year.
Got it. But what you and I have talked about, and what the bigger impact on not just the economy, but the Social Security Trust Fund in general, is the solvency of it.
Right.
So can you talk about what the impact of that, and if we want to put this back up, maybe this could help.
So we talked about that trust fund, right? And that trust fund, if you're a senior and you're collecting Social Security, you're getting checks from that trust fund, right?
Mm-hmm.
That trust fund is targeted, I won't even say projected, targeted to go insolvent by 2035. So what that means is, doesn't mean it's like no money in the account. It means that there's more money going out to seniors than being paid into by workers and such. So there's actually a law that says, a federal law that prohibits the Social Security Administration from paying out more in benefits than it collects in revenue. So at the point that trust depletes, then there will be an automatic and immediate cut to they'll reduce it to the levels that match the program revenue. So there's going to be a reduction in payments. That's bottom line. So pre this law, there was a projection of somewhere between 17 and 19% reduction of full benefit payments as of 2035. So if you were, and these numbers aren't going to make sense, but let's say you were getting $1,000 check and you've been getting $1,000 check, and then in 2035, this reduction happens because nothing's been done and there's not enough funds going in, you'll now start only receiving $800 a month.
Right.
That was pre-bill. With all of these new tax deductions, whether it be for the deductions for seniors not that are eligible to not pay to get their benefits reduced or to get, I'm sorry, I'm not
to get that deduction. No, for them to qualify, right? For that deduction.
But if
right,
you think you've got all these people that are going to have tax reductions, and then you're going to have these other people that aren't going to be, that are going to get a deduction for overtime, the portion that they get paid in overtime, and you're going to get a portion of these people who aren't going to pay, or they're going to get a deduction for their tips. Now you got a big bucket of money that's going to reduce that Social Security bucket, that trust fund. And basically what has been projected is it will lower the revenues collected from benefit taxations by approximately $30 billion per year for the 4 year or how long. That means that now the trust fund is projected to be insolvent as of the end of 2032. And instead of being a 17 to 19% reduction, it will be approximately 24%. So not only will it happen faster, but it'll mean less in your pocket. That's the real big hit.
Yeah. So that's the overall. There are some seniors who will benefit, and I know my ex-husband is one of them, will benefit from this tax deduction. Not all seniors will, but the bigger issue is that it could take Social Security, push Social Security into insolvency earlier.
Yeah, absolutely.
Right.
It absolutely.
And that's if Congress doesn't get their act together and either remove the cap completely. Can you talk a little bit about that cap?
Sure.
And what that means?
So right now, and go back to your paycheck. If you make less than $176,100, and I bet you there's a lot of people out there that make a lot less than $176,100. If you make less than that, then you're paying into Social Security and Medicare every paycheck throughout the whole year. If you make $176,100 and more, once you hit that $160,100, you stop paying Social Security. Medicare, the cap was eliminated years and years and years ago. But Social Security, you stop paying. So you're paying, the people that you're paying in the same percentage. It's really unfair. The rich or the people who make a higher income, they just stop paying. Now, this is, not Republican or Democrat. Both parties have kicked this can down the road for years. Nobody's really addressed it. There's been a lot of conversations about, they're talking about, well, let's raise the full benefit age to be 70 instead of 67 for those born in 1960 or higher, to be 70, and or reduce the benefits. So it could be a combination of both. We could raise you can't take you can't get full Social Security till 70, and when you do, you're going to get less money. Well, I don't know about you, but I don't know how many people at 70 still can and are able to work and can get jobs, can get hired.
Well, that's my bugaboo in this whole thing is 70. Let's go back to 60 and try to get a corporate job. So my question is, if they're going to do this, where and how are you going to, you meaning the government, going to incentivize companies to hire people between the ages of 60 and 70? Because I don't see any of that.
Nope.
Right?
Yeah.
So you could have this wonderful
work.
career, and then at 70, you're what, a greeter at Walmart because corporate America thinks you are not relevant, or that you don't provide any benefit any longer because of your age. Ageism is a whole different video, but we can talk
and believe me, because I'm right there. I was retired at 63 because they eliminated my department, and I did look for work, and I couldn't touch, let alone get an interview, which I didn't get any interviews. But the salaries that were being offered for the job that I was qualified to do weren't anything close to what I had made. So it was very frustrating. And I think also you've got to think about, all right, raise the retirement age to 70, which is a whole issue in itself. But now let's reduce the amount of benefits. Well, you've got people that can't live on what they're getting now, and you're going to reduce that even more. It's not that much. It's not that much money, honestly. You've got to have some other type of income. I'm from California. It's very expensive to live here.
Well, and everyone in those higher tax brackets just got a huge tax cut again, or got it extended. So 6.2% shouldn't be. So my question was always, and I didn't do the research on this, and normally I do, the reasoning behind the cap, because they think people who make 180 or more won't need Social Security or won't collect Social Security, which is a fallacy and not valid, because of the fact that corporations don't hire older workers.
No,
they're not making that kind of money.
I think it's just, and note that cap, there is a cost of living adjustment. I won't say it's done every year, but Congress does pass cost of living adjustments, so it could go up every year. So it started at much less when all of this, when they put a cap on it initially.
Right.
But my opinion, strictly my opinion, is that they didn't want to impact wealthier adults. They didn't want to, they put a cap on it so that the millionaires or the, people making hundreds of thousands of dollars wouldn't have to pay more.
Or the people in Congress.
Or the people in Congress. Yes, exactly.
Yeah, which is infuriating, right?
It is very infuriating, because they're not helping the middle class. They're not helping, people that are in dire straits. They're helping their cohorts. And
so at minimum, they could raise the cap to 500,000.
They could,
right? At minimum,
raise the cap. If they raised, now I haven't done the calculation with the new
bill
law in place, but originally, if they had raised the minimum or eliminated the cap, that they would make Social Security solvent for another 75 years.
Sounds logical to me.
Yeah, well, it's been something that's, I mean, everybody else seems to understand it, but Congress, that this is what needs to happen. But they are impacting their donors. Their impact. And you gotta remember here, it's not just the employee paying into it, the employers are paying into it as well.
That's true. So
So
that's something that we
you're
didn't
now
highlight
putting
before.
higher liability, not just on the employees who are making a lot of money, but on the employers who are going to have to also match that amount of money. Those are their donors.
So back to the corporate greed, right? They don't want
Greed,
to have to pay.
selfishness, and ignorance. That's what I think the
I don't know. That seems logical. So that's the Social Security tax in a nutshell. So I
Yeah.
think we've kind of really shed light on what the truth is on that. I think was there anything else that we had pulled we wanted to add to that?
Well, we were going to talk about tips and overtime, but
We're going to do that. We're going to do that real quick. So we'll do that quickly. We'll do that quickly, right? So I did pull just this budget lab, this little report here. No tax on tips over time would worsen tax rate dispersion. I'm like, okay, what does that mean? So the key takeaways here that no tax on tips and overtime would exacerbate horizontal inequities in the tax code. They're saying that this is going to really complicate the tax code. So two people earning the same amount in wages could face very different tax rates. So one of the things is, again, that they were talking about was how the tax code is going to be ginormous to try to get through. For some groups of tax filers that are same family size and in the same amount of money, variation in taxes would more than double. And today, wage income is generally taxed in the same manner for everyone. No tax on tips and overtime would open the door to treating wages differently based on who is earning it, blah, 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 blah. But what is the real truth? They're going on with a lot of, I think, mumbo jumbo here, which some of it is valid, I would say. But when they say no tax on tips, what are they really saying?
well, first of all, it's not going to change your paycheck. It's almost kind of like what Social Security was. You're going to be allowed to take a deduction. It doesn't change your taxability on your paycheck. So you're not going to see an impact on your take-home pay. At the end of the year, you'll see an impact. You'll be able to take a deduction. Both parties have been in agreement that something like this should happen. How it has to happen is, I think, what you were just talking about. It's complicated. It's very complicated. So you're not going to get an immediate bump in your take-home pay, but you will be able to apply deductions during your tax return. So you got to think about tips as, all right, you've got people who work in restaurants, you've got people who work in hospitality, you got bellmans at doors getting tips. When you think about tips, it's not necessarily all cash. There's credit card tips, there's gifts that could be received as tips. So how do you manage all of that part? And a lot of tips, let's just talk about restaurants. My husband and I owned a small restaurant for a number of years, and it's kind of all on the honor system. It is required for the employer to report 8%. You have to 8% of taxes, or of 8% of taxes on tips off your gross receipts.
Oh,
so
got it.
It's whatever your gross receipts are. 8% of that should be considered as reported as tips. Well, when you get tips off of a table, so you go and your employees, or you're a server, and somebody leaves you cash, you are required by law to report $20 a month up to, or greater than $20 a month. That is, you are required to report that as income. Do people do that? I think with the credit cards, yes. I mean, tips are a lot of times put on the credit cards that could be put into, captured by a point of sale system, and that's captured in the system. But employees are required to report at least 8% of their gross receipts as taxable income. They have to report those tips. So you've got this whole thing about how much is being reported, and then is it all being reported? And then will they report more because that they could then get a bigger deduction? But if you think about most tipped employees, they don't make enough to pay taxes anyway in a lot of areas. So is this really that big of a deal? Yeah, it'll affect some people, but not all. And then a good thing they did is they put a cap on it that a worker couldn't make, or if you made more than $150,000, then their tips would start to be taxed. And the whole point of that, I believe, was to stop people like lawyers or hedge fund managers going, yeah, I make 100% tips. And being able to take that as a full deduction.
Right. So let me put this up and see, because this is kind of what we just said. Again, I love AP. They do some really good reporting. Associated Press, for people who don't know what AP is. So it would create a new tax deduction. Again, it's a deduction.
No tip, no tax.
No, eliminating federal income taxes on tips for people working in jobs that have traditionally received them as long as they make less than 160,000 in 2025. So that's what we were talking about. Only tips reported to the employer and noted that's what you were just talking about, W-2, their end of year tax summary would qualify.
Right. So are they going to start reporting all their cash or gifts as tips?
Well, yeah. And the reality is, and you worked in the industry, the reality is, what is the ratio now of tips on credit cards versus cash?
Right.
Right. Is there
I think the average tips, and again, based on where you live in the country, because it all could be different. Right. You've got, people that pay 15% tip, maybe up to 20% tips. Tips used to be, you're getting a little bump for, better service. Now it's expected. And, 20%, at least here in California, is expected. And if you get good service, then you would go higher. I could remember there were people that would run up a tab and not leave any tip. And so it's a hard thing. And then there's a whole complication of every state is handled differently. So North Carolina, we had an employee that came from North Carolina that worked for us. In North Carolina, they get tip credits. Well, that allows employers to take tip credits and pay their employees $2.13 an hour, as long as the tips they make bring them up to the minimum wage. And North Carolina happens to be the same minimum wage as the federal, which is $7.25.
That's criminal. That is just
so
criminal.
They pay $2.13, and then they tax the tips, then the tips make up the rest of their $7.25. How do you reconcile how that's handled and get the deduction versus somebody like in California that their employers are paying $17, $18 an hour, and their tips are up and above? Again, it's really complicated. And I don't think these people who write these bills really understand the implications of what they do and how it impacts.
They don't, because they're out of touch.
Yeah.
That's a whole other topic. So then how does that apply to overtime?
Oh, well, first with overtime, it's important to understand with overtime, it's it's 1.5 times most of the time. I mean, you get double time too. There's different kinds of overtime.
Right.
But your traditional overtime is time and a half, right? You're only getting the deduction. It's not that it's not being taxed. You're getting the deduction on the half-time portion. So if you make $10 an hour, right? And no, let's say you're paid $20 an hour. And when you make overtime for, like, let's say you work 4 hours overtime, you're making $30 an hour for those 4 hours. It's only the $10 difference that you're getting the benefit on. So it's, again, the bigger winners here will be the middle class, because your ones that may work overtime but don't make a lot of money, they probably aren't paying your federal tax anyway. Okay. And when you really do the math, it's not that much money. Oh, and again, both of these, for overtime and for tips, 4 years, 2025 to 2028, they expire. So these are I kind of consider them like little dog bones. We're going to throw you some dog bones and make it sound really big and really important. To me, all of these, there'll be a little benefit. It'll be nice to have a little extra money at the end of the year when you do your taxes, and you get something back. But it's going to impact not a large swath of people, and the impact on Social Security in the long run is going to be more devastating.
Yeah. So to kind of summarize again, I love that analogy. It's they're throwing, and the middle class, and we say that's good if it benefits some of the middle class, that's really good. Except what we're not going into is the ramifications on the lower and minority groups and the people who just don't make a lot of money. They're going to lose Medicaid. So how do you kind of balance that out? So you might benefit a little bit on one side, but you're going to lose a lot of benefits on this side. So that's, I think, one thing that I kind of came, to realize. And overall, it is a bone, or it's a crumb, or it's a here. We're going to give you this thing called, no tax on tips, no tax on Social Security. No, when it's not, it's misleading at best.
Well, notice that's what the Republicans were talking about when they talked about the bill, where the Democrats really were focusing on the bigger impact, which was the Medicaid cuts. And that's the most devastating parts of this,
all to give. And we have to keep this out in front of people, because we should give more benefits to seniors when it comes to deductions. Absolutely. But that shouldn't be done at the cost of Medicare. It should be done at the cost of stopping these huge tax cuts for the people who don't need it.
Yep.
For the corporations and for the 1%.
We need to get money out of government is what we need to do.
And
that's a whole different subject.
That's a whole nother video. We have a lot of videos lined up here. So so just to wrap this up, this is kind of what we wanted. Our intent was really to highlight what is misleading and really give you, based on our research and knowledge, what is the reality of it. And I think the other big thing here is it's temporary, right? Whatever these cuts or benefits or tax benefits is temporary. So it's a crumb, right? So Linda, thank you. This has been very informative, and I hope everyone takes away, some knowledge. And I will, all the resources that we pulled here from AP and all of Linda's research and resources, I'll put in the description. And we encourage you to do your research, please. Do not listen to the sound bites, right? Do not take it at face value. Always look under the hood and do your research. So Anything else to add, Linda?
No. I actually, when we were talking about tipped employees, that's one thing I meant to say was it's really such a small sliver of the labor market. It's only about 2.5% of all
Of
employees.
all,
So
yeah,
yay! And I wish them all well, and I'm glad some of them are going to get
absolutely.
more money in their pockets, but it's it's not as big as they've made it sound.
Yeah, it's crumbs, it's peanuts compared to what we as the American people should be able to earn a living wage. You know, we're glad to pay taxes, but geez, give people a living wage.
Well,
And
let's get people to get a living wage, and hey, what happened to all the promises of reducing cost of living? I mean, I haven't seen anything coming out about, reducing the price of eggs, and now meat's going up exponentially.
meat
We're
is
not
really high right
focusing,
now.
we're not
Yeah.
focusing on the right things. This isn't rocket science. It really isn't. Pay people a living. When you've got companies and people making billions that weren't billionaires before, and now are making billions, and I do not understand why they can't pay their employees a living wage. They would work better for you. I'm telling you right now, you pay people what they're worth so they can have a good life.
I don't think people connect the dots either. When more people make a living wage, they spend more money and it's a boost to the economy. And you know, the circle of economic function. So, we
They
live in
need more houses,
capitalism. I mean,
islands, they need rockets, they need what? I'm just like blown away. $50 million weddings. I don't understand at all.
yeah, I
But
don't either.
anyway, you can cut all this part out.
That's another no. No, I think it's good conversation. So anyway, thanks again, everybody. And until next time, join us on Wednesdays, Fridays for We the People Unite at 4:30 p.m. Pacific time. And then we also have May, Katie, and Keisha who have the Millennial Gaze on Mondays. So I would definitely check that out. And then we drop videos like this from time to time and a little satire in between. So thanks, everybody.
We the people unite.